Dear learners, welcome back to your educational channel Learn and Educate, where we were studying a few basics about the Foreign Exchange Management Act. Today, we will be continuing with one question, that is, what does foreign exchange mean? What is the meaning of foreign exchange? As per Section 2, Clause N of Foreign Exchange Management Act, foreign exchange. Foreign exchange generally mean by the foreign currency. Foreign currency means every currency which is issued by the central bank and authorized by that country is that person's currency. But when a person resident of one country deals by make transactions in the currency other than its own, it would be foreign currency. When a person generally converts currency, one country's currency, into another country's currency with respect to a rate of exchange, it is foreign exchange. Foreign exchange means where the persons who are engaged, who deals in the goods or services, who provide services, who deals in the goods, but at the time of settlement of the accounts, payment of the consideration, they deals in more than one currency. There at that time, foreign exchange comes into play. Where deposits, where an individual, a person, a partnership firm, a company who deposits certain funds of money with a bank, with a financial institution, or with another entity, with another person. It is deposit. Credits. Credit means where a liability has been created with respect to purchase of goods, sale of goods, rendering of services, dealing in another kind of commodities. A liability has been created by one party which is to be repaid. It is credits. And balances payable in any foreign currency. A balance which has to be paid in foreign currency. Therefore, foreign exchange means foreign currency, and it includes the draft, bank draft. Demand draft is a bank document which has been created. Demand draft. Draft is a negotiable instrument which is similar to bill of exchange which has been issued by a bank. A bank issues a demand note to its account holder, that is a drawer, which directs another bank, which direct its branches to pay a certain sum of money to a specific person, where bank it draws in favor of a person, that is a drawer. A bank issues a note, a bank issues a draft in favor of a drawer. It directs another bank to pay a certain sum of money to pay the specified money to a person that is paying. It contains a pay to order where the draft is issued only by the bank and not by an individual basis, which directs another bank for the payment of specified amount of money to the specified person, that is the payee. The validity of the demand draft of the draft depends upon the regulations and the countries. It has a unique number. A draft has a number which denotes its identity. A traveler's check. Traveler's check is a check which is authorized by bank, which is denominated in a currency, in a currency of foreign country. Therefore, traveler's check is a check of an amount specified in that check, which may be encashed, which may be used in payment in a foreign currency of another country, which means a currency of another country. A transaction where the drawer bank makes payment of the amount specified in a check in the currency which is mentioned in that check. Traveler's check are generally used by the persons who are traveling from one country to another with respect to a payment which a liability arises in the due course of time and the traveling or dealing in any goods or services, and where consideration is to be settled, which means that mm, traveler's check is a negotiable instrument which is made for a consideration for the value received. Payment has to be made for the value received. It includes letter of credit. Letter of credit are the documents which are being issued when the persons who are dealing in the goods or services, these are issued as a guaranteed by a bank with respect to goods which are to be sold, a consignment which has to be delivered, and it guarantees the buyer that the payment to it guarantees to another person resident in another country or in any region, which guarantee that the buyer will make the payment, of the goods, which guarantees the payment of the goods. A bill of exchange. A bill of exchange is a document which is in writing, which is in drawn in favor of another person. Bill of exchange contains an order to pay. Bill of exchange is that its drawer orders the drawing. It is bill of exchange is generally written by creditor who it is order on the debtor who directs. It is an unconditional where it is not dependent on any event. The drawer signs it. The instrument must contain the proper signature where the drawee accepts the bill and it has to be paid. It is a written order from the drawer which instructs the drawee to pay the amount specified to the payee or to the drawer. Moreover, bill of exchange is a negotiable instrument, which means that the creator can transfer it to another person and order the receipt to that payee. The party which draws the bill of exchange, its name is contained, the name of the drawer, the name of the drawee, amount which has to be paid, the date of the transactions, and the date of the maturity. It is all specified in a bill of exchange. All of this instrument which is expressed or drawn in Indian currency, the draft, traveler's check, letter of credit, and bill of exchange, which are expressed or drawn in Indian currency but is payable in a foreign currency, would be under the definition, it is included under the definition of foreign exchange, where foreign exchange means foreign currency and includes deposits, credits, bills payable in any foreign currency, draft, traveler's check, letter of credit, bill of exchange, which are been expressed or drawn in Indian currency but payable in any foreign currency, which means other than Indian rupees. And foreign exchange also includes draft, traveler's check, letter of credit, bill of exchange, which are drawn by the banks or institutions or persons, which is drawn by the bank, financial institutions, persons who are outside India but payable in Indian currency, where the all these instruments are issued to settle the consideration, but the payment is made in Indian rupee, that is Indian currency, where the Foreign Exchange Management Act is an act which regulates and reviews the ongoing process of economic exchange to take into consideration the development in the foreign exchange reserves, the growth in the foreign trade, the rationalization of tariff, and the convertibility of the current account, the convertibility of the currency, which makes the foreign exchange, which makes the Foreign Exchange Management Act to facilitate the external trade, the payment and the receipt of the currency for the purpose of promotion and maintenance of foreign exchange market in India. Therefore, foreign exchange includes all the instruments which are being drawn in Indian currency but has to be paid in a foreign currency, and foreign exchange as per the Foreign Exchange Management Act also includes the instruments which are drawn by banks, financial institutions, or persons outside India but is payable in the Indian currency.